Hello folks, a very good evening to you folks. This is Mansa. Welcome back. It's been a while since I put something here. This is 2025, 1st of April, and I am back at these live streams. So I tried doing this last year. I didn't have very good momentum and the consistency was quite poor. And I'm coming back again and redoing the whole thing again and see how the progress is going to be. And I'm really convinced of, I'm really hyped up in terms of my consistency and the work input that I'm going to put this year. So what actually we are going to do at the moment is just a recap of the trades I've taken today on Dax. So again, just some bit of a background. I trade the stock indices. During London session, I work with German 40. During New York session, I work with Nasdaq, and during Asian session, I work with Nikkei 225 index. Very well. So let's get right into it. If I open there and I click the trade history, you can see that I've got quite a number of executions there. Not the best display to begin with, doing my live streams with, but it is what it is. Okay, now going into it. I use a strategy called pre-market opening range breakout. So pre-market opening range breakout seeks to capitalize on the market's activity 3 hours before the market opens. So for instance, this is Dax German 40 and it is heavily traded during London session. So that is 3 a.m. New York time and 8 a.m. London time. So 3 hours before London session opens, you mark that area there and using the 10-minute time frames and the high that you'll get from that area and the low that you get from that range. That is what is going to influence you on the trades you're going to take. Well, this is not a very new concept. It has been used over the years and it is commonly known as the opening range. However, there are different forms and different shapes of it, depending with the nature of one's trading. There are those who use the 30-second opening range, others 5-minute opening range, 3 minutes opening range, 1 hour opening range, 15 minutes, which is quite common opening range. But I prefer to use the pre-market opening range. And after years of backtesting and the data I've collected, I came up with, I settled on the 3 hours before the market opens. So what you're seeing here, well, pardon the time you're seeing on the screen here, this is MT5 trend, and the broker I'm using, he is in Dubai. So that tells you we got some bit of mixed up time here and there, but it's okay. No worries about that. So the 7 a.m. that I have my first vertical line there, let me clear them as well as clearing these executions. So what you do, you begin by first getting where the market will open, and that will be 10. So the last 10-minute candle before the market opens, so that will be 9:50. Okay, so if you are using the New York time, that will be 2:50. If you're using the London time, that will be 7:50. Okay, then 3 hours before. Okay, so 3 hours before, that will be something close to 7:00. Okay, again using the New York time, that will be midnight of New York. Again using the London time, that will be 5 a.m. in the morning. Okay, very well. So then what you do from there is you get the high of that range and the low of that range. So the high of this range comes at this point here. Okay, so maybe I should be a little bit slow. So the last candle here to be printed before the market opens, the market opened using this candle here. So the last candle to be printed, it gives this high. Okay, so this is the high that was delivered. I hope it's quite straight there. There we go. and the low that was delivered during that range is this one we're seeing right here. Okay, and note again, you have to be very specific with the time frame, because if you mess the time frame a little bit, you're going to have some altered results. So what I'm using again, it is 10-minute time frames. That time frame. So there's the low of the range and there's the high of the range. And now the only thing I'm waiting for is the market to breach that high or to breach the low of the range, and I will execute my positions based on the delivery that will be given by the market, whether it's on the buy side or whether it's on the sell side. So on today, what happened is the market breached the high of the range, and I want us to zoom in and see the actual price activity there. So when the market breached, in my playbook, one of my rules is as soon as the market gets breached, I should execute my first position after 10 points, latest 15 points. But today I was hesitant and I was late, so I managed to execute my first position after, let's see, so this is where I got my first position. So already that is a compromise on the system. Okay, so maybe I give you some bit of the figures here and there on the entries and on the exits. So on the entry, you already have the entry model. So as soon as the price breaches the high of the range, you are in, and you only wait for 10 minutes, 10 points or 15 points max for you to have your first position on board. So if you're one of those people who prefer to have, to work with only one position, that will be very good with you. Now, again, after the years of backtesting and the data that I've collected, the worst case scenario, this type of model delivers at least 70-60 points. That is the worst case scenario. The best case scenario, this delivers from 100 points, 200 points, 150 points. Okay, so you're gonna have to be very aggressive with your first positions, with your first position, or maybe the position you are getting on board with. So the first mistake I did today was delaying to execute the first position. And so what I did, I got delayed, let's see with how many points. So the high of the range was at 320, and I had my first execution at it was at 347, but I got filled at 350. So 350, and the high of the range is at pardon my voice, and the high of the range is at 320, and I got filled for my first buy at 350. So I was late with 30 points. That is a lot. Okay, however, an entry is an entry, whether it's a late entry or an early entry, doesn't matter in the end of the day. Sometimes you not always be getting the perfect entry as you may want it. So then after that, I have a scaling plan for only 2 more positions after my first execution, and I do that on a scale of 20 points or 10 points. Okay, now to be very specific, I do that after a breach of 15 points, max 20 points. So let me see again. So after I got filled the first position with 50 points at 350, the second position got filled at 362. So I was quite aggressive there. So the second position came on board after 10 points. Okay, and then the third position I got filled after close to 20 points. So that is from 362 approximate there and 382. That gives you an approximate of 20 points. Okay, so now with that, I had my stop loss midpoint of the range. That is what the strategy dictates. So if you use a Fibonacci just to give you a rough estimate of the midpoint of the range, there is the level here. So this is where originally I had my stop loss, but it was quite a huge stop loss. One, it's because I delayed before I got my first entry. So I was late with 30 points, and the whole of the range was something close to 120 points. So that means from the high of the range to the midpoint of the range, that is allowed 60 points plus the 30 points that I got delayed before I got my first position. So that tells you my total risk in terms of point is 90 points. So that is quite a lot. And the problem with that is when the market begins retracing or going against you, for me, I find it very hard to sustain seeing the market collect all those number of points. So yes, in as much as the first position I'm willing to put on stake, to place a stake of 90 points on the first position, the process is, as I scale in, or rather as the market goes in my direction, I'll be quick to adjust my stop loss. And that is what I did. So as soon as my first position is on board, the second position comes on board, and my stop loss is transferred to this second level here, the 75% level of the whole range. So that is to help me minimize my downside. So I have now two positions, and there is both of the stop losses are in the upper quadrant of the range. Now, I could have gotten out at this price. However, I did not get out at this price. So I could have gotten out at this high here. However, at first, I didn't have a lot of clarity on my exit. So that is the first mistake I did. Secondly, I was hesitant in terms of closing my positions. And thirdly, due to getting the whole movement late, that kind of messed up. I made things appear somewhat chaotic. And so achieving the right clarity in terms of, getting your exit well, I really missed out on that. Okay. So hence I missed that exit. And by the time I was okay cutting the loss, two of the positions that I had added already had some good losses there. Okay. So now again, one of my problems has been having a lot of executions. Okay. So I know my strategy works within the first 2 hours after the market opens. Best case scenario, it extends another 2 hours. So the strategy seeks to bet on the momentum of the 1 hour, on the 4-hour candle that is created after the market opens. So the momentum of the 4-hour candle that is formed after the market, the London session begins. That is what you're betting on. Okay. But again, it is not at all times that within the first hours of that 4-hour candle, the market will deliver very steady momentum, whether it's bullish or whether it's bearish. Okay. So those are some of the, the valuations to the model. Okay. So now what I have come to conclude is I only need to have 2 attempts. So the first attempt with 3 positions and the second attempt with 2 positions. Okay. So after I was stopped out on my 3 positions, and clearly, as you can see, the the price did not come back to the 50% of the range. But because I had 3 positions on board and I was risking heavily, especially the added positions, there is no way on earth I would have sustained seeing the market go and get the 50% of the range. So what I did was cutting my loss early. Okay, because nobody has the certainty when the market begins to retrace that the market will retrace up to this level. It will not get the 50% of the range, or maybe it will simply stagnate at the high of the range. No one has that certainty. So instead of hoping that it will not get the 50% of the range where my stop loss originally was, I prefer to cut my losses early as soon as the market begins gravitating on the opposite direction, contrary to what I was expecting and what I was, the trades, contrary to the direction I was projecting the market will move to. Okay, so that explains these firstly executions there. So that is the reasoning behind it and the thought process behind them. Okay, so then again, the market gets rejected with this 5-minute candle here on the high of the range. The next 5-minute candle that begins to be printed out manages to absorb all the orders of the sell orders in the previous 5-minute candle, and that is what is commonly known as engulfing candles. So I tend to see that as the orders, the opposite orders that are being placed. In this case, are the sell orders for this specific. Let me show it to you so that we are on the same page. So we have I don't know whether maybe I should zoom this or no, a little bit more. So we have this 5-minute bearish candle, the one that I used to close my positions, okay? It gets rejected at the high of the range, so that at the back of my mind, that tells me the market is no longer interested in trading below or within the range. That is how I interpreted that. And the next candle closes above the previous bearish candle, the previous 5-minute bearish candle. So I execute my first position, and you can see it is within the close to proximity of the second added position here. So, and I